Hello, I'm Megan Horneman, the Chief Investment Officer for Verdence Capital Advisors. We're coming to you today to give you an outline of our second quarter white paper, where we discuss artificial intelligence, specifically large language models like Claude, ChatGPT, Gemini. People have been using these in everyday life. We're seeing a growing use of these in everything from finding recipes to planning travel. But we're also seeing a trend towards investors using these large language models to get investment advice, also to maybe a second opinion of their financial advisor. At their core, these LLMs are just simply word predictors. They're trained on a vast variety of information from the internet. That comes from textbooks, websites, articles, forums, blog posts. They're simply taking your prompt and then figuring out, using all of that information, what the next predictive pattern of words may be. It is not taking math into its equation whatsoever. And when you are performing what we do to develop a well-diversified long-term asset allocation, it entails a lot of math and a lot of human expertise because we have to forecast for the future. There's three main inputs into what we consider a optimized portfolio, and that is expected returns for each asset class, expected correlations, as well as the expected risk for those asset classes. That comes from the human touch as well as math. Now, taking math out of the equation, these LLMs are also trained with a very specific cutoff date. And most of these cutoff dates, if you use Claude or Gemini or ChatGPT, are back in 2025. So everything that's happened, and we know there's been a lot that's happened since then, is not trained on these models. So when you may be asking about an asset allocation for the future as of today, it's not taking any consideration into what's going on in the economy with inflation, with interest rates at this time. We realize it can be tempting to put an asset allocation into these large language models to get a second opinion of how a portfolio is constructed, what assets are in there. But this doesn't tackle the main problem with these LLMs. These are not math-based. These are not performing real optimization. Pretend that you ask somebody for a restaurant review and they come back to you and say, and talk about the food. Their descriptive nature makes it seem like they tasted it, that they smelled it, that the ambiance, they can describe all of this when they actually have not been there. That's a similar scenario of what you're getting there on these large language models. And when you look at how they're trained, if they're trained up into a cutoff date, they don't have that information. They're going back on the internet on anything that they can find. That information can come from forums, from blog posts, and Reddit. Let's look at Reddit, for example. I think that we've seen what some of these online social media sites can do to the markets. We can go back to the GameStop phenomenon when we saw Reddit posts that drove that stock price up about 1,600%. Investors piled into it because they were reading these posts, and we saw that it quickly just deteriorated, and those that bought into that at the end were left with very big losses. If you haven't heard the word associated with AI and large language models, it's worth repeating, and that is hallucinations. And this does happen. These models, it is very easy for them to get mixed up in the different prompts, and they can cross-reference some of this information, and the output ends up being simply wrong. But it comes to you with as much confidence as you would expect it to be 100% correct. Now imagine that this is when it comes to investing. Imagine this is millions of people asking for stock-specific advice, and these large language models are producing the same information, and investors are acting on this. This creates a herd mentality. This can drive stock prices up where they definitely should not be. It also can create amplified volatility in a market that we know is already susceptible to volatility. These LLMs are not registered investment advisors. They're not regulated by any entity, and they're not acting as a fiduciary on an investor's behalf. In fact, if there's an investor that's uploading their current statement or their asset allocation to these LLMs, they could be stored in a third-party server, which also could be subject to a security breach. It's important to understand that personal information can be out there on the internet, not only subject to a security breach, but also being trained by these large language models. Now, that doesn't mean that we aren't using these AI tools. It doesn't mean that we are critical of them. In fact, we're here at Verdence trying to find the most useful way with these tools that we can work with them to make the client experience better. From a research perspective, we're able to aggregate earnings reports, research reports, large sets of data and filter through that in a much more efficient and quicker manner. From an advisor perspective, there's a lot of different tools that can be used with these large language models to prepare for meetings, to have notes, be very well organized for meetings. All of this is to make that client experience better. What these large language models will not do is they won't change our personal opinions. They won't be used to distinguish long-term asset allocation. Instead, we'll use them as a tool in the work that we perform for you to make it better. Now, we'll continue to follow the developments in this market because we are just on the cusp of what AI can do and how it can make us all better, efficient workers. We'll continue to monitor it and any tools that come out from a portfolio management standpoint, but we still stand by that there is that personal relationship and personal knowledge that's important for long-term investing success. Thank you very much, and if you have any questions, you can reach out to your financial advisor. And we also welcome you to subscribe to our podcasts. Markets with Megan is a regular podcast that delves into the economic data. What does it mean for the investments, and what does it mean for the economy? From the Ground Up is with our CEO, Leo Kelly, and he talks to business owners on how they built their businesses and then successfully exited. And then the alternate view is from our head of due diligence, Matt Angelot. He gets into the details of individual alternative investments and how they may be placed in portfolios, how they're constructed, and how they can benefit portfolios in the long run. Thank you very much.